Welcome everybody to my YouTube channel. I'm going to try and do this on a weekly basis because this is what all of the coaches and the podcasts I'm listening to over here. Some technical difficulty just to get this little adapter over here going, but now I'm situated, I'm in a good shape. So I want to talk with you about the week ahead and then what to expect that's going to happen. Basically, what's going to happen this week that can move rates. And then also, why don't I give you a quick synopsis of why mortgage rates today hit again over 7%, and we cannot seem to break down and get to the mid sixes, which supposedly it's supposed to kind of like kickstart the market and get things going. So looking ahead this week, Wednesday, we have a 20-year bond auction that's going to, and I'm going to show you soon who's buying our treasuries and helping actually kind of keep rates a little bit lower. It's coming up on Wednesday. We have new home sales later this week, initial jobless claims, and the market is closing early on Friday in observance of Memorial Day. So I'm going to do right now, I'm going to do a quick share of my screen over here and basically talk with you. Again, and this is courtesy of our good friends at MBS Highway, Barry and Dan and the rest of the crew that gave us this information earlier today. So I'm going to do this right now and share the screen with you. And we are go. Okay. Perfect. So as you can see over here, this is basically what we're showing is what happened earlier this week or over the weekend that Moody Analytics actually downgraded the rating of the United States bond. So what you can see over here, what's the reason for that? If you take a look at a few of the countries over here, we have Australia, Canada, Denmark, Germany, basically developing developed economies, and you can see it over here. Public debt as it relates to GDP. Look at Australia. I mean, that's why they're in first place because only 58% of it. Denmark the same way. Germany a little bit elevated. Netherlands, so kind of like Western Europe and way down under. Going back to the United States, look at where we're at. I mean, we're down to AA plus from AAA, mainly because the public debt is 123% of the GDP. Basically, think about it as if you're the consumer, let's say you're making $100,000 a year, okay? You're spending $123,000. The $23,000 that you did not earn, it has to come from somewhere. What do you do? What do you do? You basically get it via debt. So United States, what they do is they print or sell more treasuries or print more money that can create inflation. But basically, usually you sell more treasuries and kind of like IOUs, meaning, hey, if you give us the money, we're going to pay it back. But when things started getting out of whack and get a little bit problem, take a look at Italy. Italy is 135%, Portugal 128, Spain 118. Okay, but if you take a look at the federal deficit as it relates to the GDP, they're not as bad shape as we are. Okay, because we are there like running at, I would say mid threes. We're at 6.4. Actually, we have one of the highest one. It is the highest one of the whole kind of like all of the developed countries, developed economies. That's not good, and that's why Moody downgraded us. So what happened this morning? Rates went shot up. They're subsided right now. We're down to like under four. It's about 4.45 on a 10-year note. We're going to get that in a second. What happened with the 30-year fixed? Now, let's take another look, because then a lot of people say, "Oh, okay." Problem is that other countries are not really buying our debt. Not so true. Looks like most countries are still buying our debt. If you take a look at again, United Kingdom, even all of the mess with the tariffs and everything, are still buying our debt. Belgium, Canada, what have you, etc. It's China is the one that stopped buying our debt, but this has started way back in 2020. Remember what happened back then? We talked about don't want to mention it, but something with the pandemic and where it started. So they're kind of like lowering the purchase for our debt, and this is what happens. Rates are moving inversely in relationship to price. So what happens is when less people are buying and they start selling, prices go down. and rates go up, again, usually, usual equation of supply versus demand, something to think about. So again, we need to try and entice foreign countries to buy our debt. And if our debt rating is going to get downgraded, it's not going to give them a very warm and fuzzy feeling on top of everything that's going on with tariffs to do that. Now, this is the most funnest part. What's going on with mortgage rates and why those are not coming down? So this is what we have going on. Um, uh, Hang on a second. Okay, we'll see that later. But basically, April 7th, remember that was the day all of the tariffs were announced. Look at this. The spread between the 10-year note to the 30-year fix spiked at 2.89. And if we go back to the beginning, basically go back a year ago, May 1st of 2024, the spread was 274. Then it dropped to the lowest one it was back on 115, 2025. So beginning of this year, the spread was only 235 basis points. But still, the lowest rates were back in mid-September. 611 on 30-year fixed, 362 on the 10-year note. But you can see right now, half a point higher, and spreads are still high. Now, in general, most mortgage lenders, they keep their spread between 180 to 200. That is out the window once rates started going up back in 2022, because we saw a spike of spreads being as high as 300 basis points, basically 3% over the 10-year note. So do the math. If the 10-year note is at 4.5, you're looking at 7.5 interest rates. And when 10-year note was up to 5, I believe it was September of last year. No, not September of last year. It was October 2 years ago. Same thing. Rates were close to 8%. So I hope this information is valuable for you and that you enjoy it. Obviously, if you like it, if you want to share it, if you want to reach out to me, direct message me with some more questions. Would love to help you out. Enjoy the rest of the week. And if I want to talk with you, have a great Memorial Day weekend. And remember, with me, you have a great friend in the mortgage business. Cheers.